weekly funding meter. And we have, as usual, Arun Natarajan from Venture Intelligence joining us to give us 360-degree perspective of all the funding action in the week gone by. Arun, good to have you on the show again. Tell us, how has the funding trend been this week? Has the new financial year then begun on a positive note after a really lackluster first quarter?
Things definitely look better this week, and we've seen something like $44 million or roughly 300 crores being invested across 7 companies this week. So it's indeed been a good week, and clearly the the investments were led by the $25 million investment raised by mobile entertainment company Hungama, and there you had a strategic investor like Xiaomi come in and to lead the round, along with participation from existing investors Bessemer, Intel, as well as Mr. Rakesh Jhunjhunwala. So that clearly led the investment pace this week. And we also had, interestingly, the next 3 venture investments all had some kind of healthcare, wellness, beauty kind of connection. So we had, serial entrepreneur, Mr. GSK Velu of Trivitron. His family office led a $12 million investment into a dental chain kind of company which supplies into dentists, and called Elixir Lab. So that investment was followed by a $6 million investment which was led by L'Occitane into a company into the aggregating beauty services MyGlam. So and then you also had a couple of other investments in the consumer internet space, making it in total a pretty good week.
Arun, you covered the VC investments, but take us through the M&A investment that happened this week by Future Group. They've bought out an internet company, haven't they?
Absolutely. So as we all know, the Rocket Internet Group has been kind of looking to divest some of its portfolio companies in India, and Fab furnished their first exit in the online furnishing kind of space. The interesting part is, obviously, there have been a lot of tussle well covered in the media between the Future Group, which has been a pioneer in the offline retail space, and the new kids on the block, the online retailers. So this, ever since clearly marks the fact that Future is not ignoring the online space. And very, very interesting is the fact that they are planning to integrate their existing brands in the furnishing space into Fab Furnish, and that clearly indicates how strong and how quickly online brands get created, and this is kind of an acknowledgement by the Future Group of that.
Arun, I want to ask you, we're also seeing this trend of companies co-investing with angels and venture capitalists. Take us to the rationale over here. What exactly is the win-win that we're looking at?
Yeah, it's actually quite interesting. It's not just the Xiaomis or L'Occitanes, who are doing this at the later stage. We are actually seeing at the very early stage, and in fact, even the first round, both corporate strategic investors as well as angels co-investing with VC firms, and these are not necessarily, seed investors looking for money support from strategics or angels. This is even big, well-capitalized funds like Sequoia and Axel, who are actually actively partnering with the angels and strategics. So for example, we looked at the Q1 2016 data. As many as 30% of the investments in the first round had one angel or the other participating. And similarly, in the case of strategics, we saw at least 12% of the investments in Q1 having one strategic investor or the other. So the reasons obviously are different. In the case of why VCs are co-investing with angels, there the reason is, they really want, these funds are pretty large, and they want to look at, sharing the smaller deals with angels so that they can handhold the company until they're ready for bigger rounds of funding. In the case of strategics, that's a dynamic is slightly different. So if you have a Foxconn, they bring a different flavor in terms of manufacturing to the startup, which obviously a VC cannot do directly. But obviously the VC has the ability to help the company raise the next round. So the dynamics are a bit different. It's very clear the VCs are willing to partner with both these segments, angels and strategics.
Finally, Arun, if there's one investor group that's been pretty much consistent in these funding meters, it's clearly the angel investors. I mean, what trend are we seeing there? Few deals trickling in this week as well. I mean, amidst all the uncertainty, if there's one constant, it seems to be angel investment, isn't it?
Absolutely. Angels, have been consistent right through, while the rest of the ecosystem has been up through ups and downs, and VCs are really focusing on existing portfolio before they commit to all new companies. The fact that angels and also family offices to that extent have stepped in has really helped the ecosystem maintain that kind of balance until the VCs are ready to kind of pick up the thread when they have more bandwidth rather than money. The money is available. Today I would suspect the VCs have less bandwidth than it's an issue of money.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.